Stanley Azuike is my guest. He's a fixed income trader at Vetiva Group. Hello, Stanley, and welcome to the program.
Thank you for having me.
All right, Stanley, I guess you were listening to my discussion earlier with Dr. Ladi Bala. What can you make out of that? And were you guys surprised when Yemi Cardoso announced the rate hike yesterday?
Okay, thank you. For the rate hike yesterday, I think a lot of analysts were tilting towards a hold in the policy rates, largely due to, the deceleration in inflation in the months of July and August. But then when you consider the hike in PMS, you consider the increase in other tariffs, I think, and also core inflation remaining sticky, I think it's not surprising that we saw the additional 50 basis points hike in NPR yesterday.
Was Vetiva Group right on point? Did you guys do an analysis before that?
We were tilting towards a hold, but then having considered, after also listening to the Apex Bank governor, that's Dr. Olayemi Cardoso speak, it is very clear that they are trying to target inflation, and also because of the core inflation remaining elevated, you can tell that, full marks to CBN for the 50 basis points hike in MPR.
So how will this affect the fixed income markets, which you cover? The different segments of also the fixed income investment space. I don't know if you've been able to have the time between yesterday, but I guess you guys are analysts and researchers and all of that. So you would have taken different scenarios if there's a hike, if there's a pause, perhaps no lowering, apparently. So it could either be of the two. So what actually is your assessment on the fixed income market with this decision?
Okay, we think we would see a knee-jerk reaction. We will see rates begin to trend up. It is worthy of note to mention that you'll see banks begin to hike or increase their lending rates, and of course, from the 500 basis points increase in CRR, the CBN has reduced the lending power of these deposit money banks. So we'll see a lot of sourcing for funding. We might begin to see an increase in placement rates. And that would also probably affect, influence yields in the fixed income market going up. We'll see a lot of sell-offs on securities, and that will just lead to increases in the yields in the fixed income market. But it's also important to mention that it would be necessary to see the complement of the CBN in terms of OMO auctions, to mop up some of this excess liquidity from the system. That is when we'll begin to see the success in yields going up.
You know that fixed income securities help investors, help those that go into that market to earn either annual, semi-annual, or even quarterly interest on the actual amounts that they've invested. Let's take a look at even at the treasury yields space, as well as even the FGM bonds market. What do you think that yields would be like moving forward with a 27.25%? There was a time just a few months ago, treasury bills was like the in thing. If you have liquid cash, people were like buying treasury bills. After some time, the rates were softening a bit. So what do you think would be happening right now for people that have spare cash? People that have, I don't know if people have that now because people are really concentrated on the basics. But for people that have liquid cash that really want to invest in the fixed income space, what would really be your advice to them at this point?
I think it is a good time for investors who have spare cash, to invest in the fixed income space. What we think would happen is if CBN is successful in, mopping up this excess liquidity from the system, like I said, it will begin to result in yield increases, particularly in the secondary markets. And that investors would possibly get, higher yields on their securities of choice. But like I've said, okay, looking from the beginning of September, the market was relatively tight, and we saw a lot of banks, in the SLF window, sourcing funding from the CBN at a significantly at a high rate. Currently, liquidity is a bit strong because of FAC inflows. We also have had some coupon inflows. We're expecting to cook maturity tomorrow and additional coupon inflows within the week. So I think the hike in yields will be gradual, and that will be largely dependent on how quickly or how much the Apex Bank is able to mop up funds from the system.
How much repricing are we going to see between now and the next MPC meeting?
That is very dicey, Nancy, but I think it's dependent on the success, like I said, in the market. Currently T-bills, long end of T-bills curve in secondary market is trading around 18% levels. If market
which is still
becomes
low,
tighter,
so we still have a real a negative real interest
exactly.
rate. Yeah, you know,
Correct.
about 4%
Yes.
or so in the minus.
Thereabouts.
Yeah.
Yes, negative. Yes.
Yeah.
So investors are still, at a loss because of the difference in policy rates and inflation, right? So we still have a long way to go, but it's largely dependent on liquidity and how Cbn'S able to mop up these excesses from the system.
Naira, Dr. Bala said earlier that Naira is stable. Of course, we've seen NAFEX and NAFEM. The governor also mentioned that yesterday, that we've seen a convergence and stability in Naira rates. How is that impacting the fixed income space as we round up?
Okay, well, like she said, Dr. Bala said, we've seen interventions from the Apex Bank, I think in the last 2 weeks, so we've seen some sort of stability in the Naira. I think that would keep FPIs, attracted to our economy. And it's also important to note that the US Fed cuts their rates. And when there's a rate cut in an economy, there tends to be capital outflow out of that economy into one that has higher rates like ours. So I think it will be a positive impact, in the fixed income markets, the Eurobonds markets, and local space as well. We would see an influx of FPI inflows. And again, it is good to note that the complement of CBN through home auctions will really help to ensure that these inflows come in.
Okay. I want to say thank you very much, Stanley, for joining me. Let's speak soon. Let's see what happens in November. Between now and that time, let's see what happens. So thank you very much.
Exactly.
Yeah.
Thank you very much.
All right. I've been speaking with Stanley Azuike, who is a fixed income trader at Vetiva Group, and we've been looking at the impact of the rate hike on the fixed income space. That's the much we can take today. Thank you for your company. As always, Monday to Friday, I'm always here 11 a.m. to 12 noon on this channel, bringing you your favorite business program on television. I am Nancy Naji. Be the best you can be, like I always say, and be that change that you want to see. I'll see you all again tomorrow. Bye now.